Good morning, MMTs. I'm going to update everybody. It is now 8 o'clock Pacific Standard Time, and I want to show everybody that we were selling very hard on this Dow. Like we said, the Dow opened at 17,204, and the low was 16,986, and the Dow is currently down over 200 points. And I'm just updating it so people can see. On that S&P 500, we talked about this and that you had to be short and that the volatility was here and it was here to stay. So having an up day and a down day, you can see right now that S&P is down here at my lower trend line at 1970 right here. This is a daily chart. Once again, we had a big rally up yesterday, but it's given all the gains back today, and the markets have been open 1 hour and a half. When we take a look at the Nasdaq composite as well is below the 10-day simple moving averages. There is a 50-day moving average here that I want to just tell everybody about. Once again, it's time to sell. There is a Jewish holiday today. And what I am saying is we are breaking below that white line as a 50-day moving average on the Nasdaq composite. Here is the S&P 60-minute chart on the opening bell. I just want everyone to know that this is a big 60-minute sell. That's a continuation program. We've been open 1 hour and 30 minutes. That's what that S&P looks like. And yes, we got down to our 1975 target there. And on a 60-minute on the Dow, you can see clearly on the Dow in the first hour and 30 minutes of the trade exactly where that is. So, like I said, the selling came heavy, and it came out right on that opening bell. So we're going to be looking for bottoms. I'm going to put this on pause. And I'm just going to let all the MMTs know how we got sold down here. This is the Dow now. And back to the S&P. The S&P remains very weak. Extremely weak. So here's the S&P. And that is that critical support level on that 60-minute. And we'll be updating this as we move throughout the day. We haven't seen this kind of selling. The bear really got a hold of that bull, and we told everyone yesterday about this bear and bull and about this volatility, up a day, down a day. So as they get technically more damaged, we're seeing more selling. And that's an update, 1 hour and a half, 8 o'clock a.m. Pacific Standard Time. 9/25 is the date, 2014. I want everyone to know that the first live transactions were in the morning. Right now, it's 11 o'clock a.m. Pacific Standard Time, and what do I have here before me? I have here before me the 60-minute chart on the S&P 500. And today's date, I'm going to show you right here that S&P broke those critical levels. So all day long, from yesterday's rally up in the price volatility, we broke that. And I said that on Sunday night. I said it on Monday when it happened. Then it snapped back in the price volatility. And then we are making lower lows in the S&P 500 here and now. Right now is 11 o'clock. Okay, I'm going to go over to the Dow, MMT. I'm going to go over to the Dow Jones, MMT. Dow Jones down 256 points right now as we speak. Same thing. That support level right over here, when we rallied up, made those highs, we coming right back down at that rally point. And the volatility was when we sold off of that, we popped right up there. And now we're making a lower low. And so that's on the Dow. And the Dow is down 255 points right now. I'm going to go to the Nasdaq composite. Nasdaq composite is down 84 points. The Nasdaq composite, they rallied up. They made the highs. We called that reversal. Here's that 60-minute volatility to make another super lower low. But here's the thing. Within the price volatility, we are going to get oversold, and then tomorrow would be an update. That is how price volatility works. And here's the Nasdaq 100. This is the Nasdaq 100. All indexes right now on the 60-minute, listen, sell off, rally, sell off, a rally, and we're right back down here across the board on all of the indexes right now. And then I'll recap the closing bell. And like I said, we're going to get short-term oversold. So every time that we pull back, we rallied. We pulled back, we rallied, and now we're down. This is a classical market maker interpretation of how to be a buyer and a seller all day long, how to trade price volatility. Get with it. Right now, 11:01, 9/25, 2014, live through the intraday process with the first morning video and here and now at that time. Top. All right, MMTs. Once again, it's 12:50 a.m. Pacific Standard Time. The date is 9/25, 2014. And what we have is the S&P, and it's going into the closing bell. So within the video, we actually had the opening. We also had the mid part and then the closing part. And in the very short term, we are oversold and we're due for what we call a volatility bounce in the S&P. And that S&P got down here today to 1966. On the daily chart, that was a breach of the 50-day simple moving average. 1966 was the intraday low here. And I'm also going to move back over here to the Nasdaq composite. Once again, it found support at my trend line right here. And it too is oversold for an upside volatility. And understanding how to trade price volatility is the king about being in the markets. Right now, that Dow Jones, well, it's only down 233, and it too is due and ready for a pop, because that's how volatility works. The whole week has worked that way. So basically, we undercut that 17,000, and it's a 60-minute chart. Everything was red in the S&P 500. That means that there was a Jewish holiday today, or the New Year, and then you have people taking profits, as they should. However, we'll be taking a look at where we buy the stocks off the bottom, that short term, they're oversold within the actual price volatility. And therefore, we're going to show that Nasdaq 100, it's the same thing, heavily weighted in the technology, internet stocks, software stocks. They're all down right here, right now. How to trade that volatility, price action volatility. Why is it that breakout gave it all back? That's volatility. Last time we got this oversold, we had a nice pop right here. You can see it right there. We're looking for a nice day tomorrow. We're looking to get stocks long off at the bottom.